$310 million in fake sales reported by Luckin Coffee in 2020. This staggering number sparked a global financial scandal. Luckin Coffee was a Chinese coffee chain founded by Jenny Qian. Jenny Qian and Charles Liu launched the company in October 2017. Beijing was the birthplace of Luckin Coffee's rapid expansion. The company's early success was fueled by a $200 million investment. Investors included GIC, a Singaporean sovereign wealth fund. GIC invested $100 million in Luckin Coffee's Series B round. In July 2018, Luckin Coffee opened 500 stores across China. The company's growth was unprecedented, with 1,700 stores by 2019. Luckin Coffee's valuation reached $4.4 billion in November 2019. The company's IPO on the Nasdaq Stock Exchange raised $645 million. Luckin Coffee's stock price soared, reaching $42.49 per share. Investors like BlackRock and Fidelity invested heavily in the company. Charles Liu, Luckin Coffee's chairman, became a billionaire overnight. Jenny Qian's net worth reached $1.1 billion by the end of 2019. The company's success was attributed to its technology-driven business model. Luckin Coffee's app allowed customers to order and pay online. The company's stores were designed to be efficient and modern. Luckin Coffee partnered with Tencent, a Chinese tech giant. The partnership gave Luckin Coffee access to Tencent's vast user base. Tencent's WeChat platform was used to promote Luckin Coffee's products. Luckin Coffee's sales grew exponentially, with $125 million in revenue. The company's growth was driven by its aggressive expansion strategy. Luckin Coffee stores were opened in prime locations across China. The company's marketing campaigns were highly effective, using social media. Luckin Coffee's brand became synonymous with high-quality coffee in China. The company's success attracted attention from investors worldwide. Luckin Coffee's valuation continued to rise, reaching $12 billion. The company's stock price was closely watched by investors and analysts. Luckin Coffee's financial reports showed impressive revenue growth. The company's profit margins were slim, but investors were optimistic. Luckin Coffee's management team was experienced and well-respected. Jenny Qian and Charles Liu were hailed as visionary entrepreneurs. The company's culture was fast-paced and innovative, with a focus on technology. Luckin Coffee's employees were highly motivated, with a strong work ethic. The company's headquarters in Beijing was a hub of activity. Luckin Coffee's expansion plans were ambitious, with a focus on Asia. The company's goal was to become the largest coffee chain in China. Luckin Coffee's investors were confident in the company's future prospects. The company's success seemed unstoppable, with a bright future ahead. Luckin Coffee's valuation peaked at $12 billion in January 2020. Jenny Qian's net worth reached $1.1 billion at the peak. Charles Liu's wealth soared to $600 million in the same period. The company's market value surpassed Starbucks in China. Luckin Coffee's stores numbered over 4,500 across China. Daily sales exceeded $5 million in November 2019. The company's app was used by 30 million customers monthly. Tencent's investment in Luckin Coffee totaled $200 million. Jenny Qian received the Entrepreneur of the Year award in 2019. Luckin Coffee was featured on the cover of Forbes China in October 2019. The company's growth rate was 200% year-over-year in 2019. Revenue reached $732 million in the first 9 months of 2019. Luckin Coffee's profit margins were under 10% in the same period. Investors ignored warnings from short seller Andrew Left in January 2020. Left's firm, Citron Research, questioned Luckin Coffee's sales data. Luckin Coffee's auditor, Ernst & Young, raised concerns in February 2020. The auditor's report highlighted discrepancies in the company's accounts. Luckin Coffee's management team dismissed the warnings as baseless. Jenny Qian told investors the company was on track to meet targets. Charles Liu assured investors the company's growth was sustainable. Luckin Coffee's stock price began to fluctuate in late January 2020. The company's shares fell 10% on January 28, 2020, after Left's report. Luckin Coffee's investors started to sell their shares in February 2020. The company's stock price dropped 20% in the first week of February 2020. Short seller Carson Block also raised concerns about Luckin Coffee's sales. Block's firm, Muddy Waters, published a report on February 10, 2020. The report alleged Luckin Coffee had inflated its sales figures by 50%. Luckin Coffee's management team denied the allegations as false. The company's investors were divided on the issue, some selling shares. Luckin Coffee's stock price continued to fall, down 30% in February 2020. The company's valuation dropped to $8 billion by the end of February 2020. Jenny Qian's net worth fell to $800 million in the same period. Charles Liu's wealth declined to $400 million by the end of February 2020. Luckin Coffee's investors were worried about the company's future prospects. The company's auditor, Ernst & Young, was under pressure to act. Luckin Coffee's board of directors announced an investigation on February 25, 2020. The investigation would examine the company's sales data and accounting practices. Luckin Coffee's investors waited anxiously for the results of the investigation. February 25, 2020, Luckin Coffee's board launched an investigation. Ernst & Young led the probe into accounting practices. Jenny Qian and Charles Liu faced intense scrutiny. April 2, 2020, Luckin Coffee announced preliminary findings. The investigation uncovered $310 million in fabricated sales. Luckin Coffee's stock price plummeted 75% on April 2, 2020. The company's valuation dropped to $2 billion overnight. Jenny Qian's net worth fell to $200 million. Charles Liu's wealth declined to $100 million. April 5, 2020, Jenny Qian resigned as Luckin Coffee's CEO. Charles Liu also stepped down as chairman. Guo Jin, a board member, took over as interim chairman. April 6, 2020, Ernst & Young terminated its contract. The auditor cited irreparable damage to its reputation. April 15, 2020, Nasdaq delisted Luckin Coffee's shares. The company's stock was no longer tradable. May 2020, Luckin Coffee filed for bankruptcy protection. The company's assets were frozen and restructuring began. June 2020, Chinese regulators launched a probe. The China Securities Regulatory Commission investigated Luckin Coffee. July 2020, Jenny Qian and Charles Liu were banned. They were prohibited from serving as directors or executives. August 2020, Luckin Coffee's creditors filed claims. The company owed $1.6 billion to creditors. September 2020, Guo Jin resigned as interim chairman. Tianshu Zhao took over as the new chairman. December 2020, Luckin Coffee's restructuring plan was approved. The company's assets were sold to pay off creditors. January 2021, Jenny Qian and Charles Liu were fined. They paid $180 million in fines and penalties. February 2021, Ernst & Young paid $117 million. The auditor settled with investors over its role. April 2021, Luckin Coffee's bankruptcy case was closed. The company's assets had been liquidated. Jenny Qian and Charles Liu walked away with $20 million each. Luckin Coffee is now a cautionary tale worth $3.4 billion in losses.